Hi, good afternoon. Welcome to Marketplace. Coming up this afternoon, Ghana Revenue Authority rolls out new tax policy measures from the 1st of July, targeting real estate, non-life insurance, and other critical sectors of the economy. Also coming up, Ghana to get $360 million from the World Bank to help stabilize the economy and lay foundation for growth after the group approved disbursements last week. Plus, Ghana making significant strides in dealing with the current standoff with Afreximbank over debt restructuring. Deputy Minister of Finance Thomas Nyakwam is confident of a deal being reached soon on the matter.
It's a well-structured meeting, and consensus building has made everything smooth for everybody. And I say bravo to the shareholders, management, and leadership of Afreximbank.
My name is Darryl Kwao. Details coming up. First up, the Ghana Revenue Authority has announced that key changes to the country's tax administration law will come into effect from the 1st of July. Among the significant updates are the introduction of a modified taxation scheme, the imposition of value-added tax on real estate transactions, and extension of VAT to non-life insurance services. Here's a business desk report.
The modified taxation scheme introduces a flexible tax payment framework targeting micro, small, and medium businesses across the country. This is in line with the Income Tax Act 2015, Act 896. Acting Commissioner General of the GRA, Anthony Kwesi clarified in a recent media engagement that the scheme is not an additional tax, but a simplified method of calculating personal income tax for eligible traders and entrepreneurs. This initiative comes with multiple payment options, including mobile money, USSD code SAR222#, and bank deposits. The Special Voluntary Disclosure Program, known as the SVDP, which was rolled out in 2024, is also being deepened. This program provides an opportunity for citizens to voluntarily disclose incomes earned abroad, which they haven't paid tax on. VAT on rental of immovable property and the supply of immovable property by estate developers will also be implemented. This requires that all state developers charge a 5% VAT on the supply of immovable property. VAT on non-life insurance will also take effect. The combination of these measures represents a balanced approach to revenue generation.
So Ghana is making some significant progress in dealing with the current standoff with Afreximbank over restructuring of debts owed the institution. This is what Joy Business has picked up from persons close to the transactions in Abuja, Nigeria. Meanwhile, Deputy Minister of Finance Thomas Nyakwam is confident of a deal being reached soon on the matter. He spoke to Joy Business on the sidelines of a shareholders meeting of Afreximbank in Nigeria.
It's a well-structured meeting, and consensus building has made everything smooth for everybody. And I say bravo to the shareholders, management, and leadership of Afreximbank. I think we are on course, and Afrexim will continue to support Africa.
Who should a new incoming president?
Well, he has been in the system for a long time, so he knows the history, he knows the tradition, and he has pledged to build on the foundation that has been laid before him And so we trust that he will deliver.
What is your expectation going forward as well?
My expectation is that Afrexim will grow and that it will be able to support Africa's development. Because Africa understands Africa. And so Afreximbank is in the best position to finance development projects in Africa in a way that in a way that will fit the needs of Africans.
I wanted to find out whether you've been able to resolve some of the issues that came up previously in terms of Ghana and then Afreximbank.
I think the most important thing is for us to talk. That is, media exchanges will not help Ghana, it will not help Afreximbank. And so it's important that
you are talking to resolve the issue.
Yes,
basically,
we are.
I heard you made some significant
progress. Yes, we are.
In Ghana,
so very soon we'll let you know what is happening.
Well, we've got more from Abuja, Nigeria. A renowned economist and policy analyst, Professor Jeffrey David Sachs, has raised concerns about the models used by rating agencies for countries like Ghana. The Economist raised the concerns on the sidelines of the annual meetings of the Afreximbank.
Well, for a lot of people, the guess is over. That is, who was going to become the new president and board chairman of Afreximbank at the end of this meeting. Well, shareholders overwhelmingly voted for the vice president in charge of legal, corporate governance and services at the annual meetings here, George Olombi, to steer the affairs of Afreximbank. When we caught up with him, this is what he had to say about his vision and plan for the institution. About 100% endorsement. What do you make of this election, please?
Extraordinary for the African continent, and extraordinary for the work of Afreximbank, and extraordinary for the support that we have from the shareholders that allows us to do the things that they ask us to do, even when people say we do not have their protection.
He believes that a lot of work needs to be done, and he would not let shareholders down based on how the vote went at the meetings here.
Transforming Africa's trade, change the nature of Africa's trade, take it out of commodities, process it, change the direction of the trade, multiply the direction of the trade.
For the outgoing president, he maintains that he needs some rest because of a lot of work he did over the years, and that is what he's going to do.
If somebody has been running for 31 years, there comes a time when the person stops, pauses and rests. So the priority will be to rest.
Well, for many people who have been following the workings of Afreximbank, it's about how the bank can sustain the gains that they've made and to ensure that it becomes that world-class financial institution, but actually African institution supporting African countries with a lot of things. For Ghana, we'll not forget about how the bank came through for us in the COVID-19, extended more than $700 million to assist the economy. Well, that's a wrap of our coverage of the annual meetings from Abuja, Nigeria. George Jaffe brought you all the updates here. Have a great day.
All right, George Jaffe with that update on the Afreximbank elections where Dr. George Olombi was elected president. He is the incoming president of the Afreximbank, and as part of his mandate, he's going to ensure there is more trading amongst African countries, as you heard in that report. Now, back to our earlier story to do with renowned economist and policy analyst, Professor Jeffrey David Sachs, raising concerns about the models used by rating agencies for countries like Ghana. Take a listen.
Speaking on the sidelines of the Afrexim annual meetings here in Abuja, Nigeria, renowned economist Jeffrey Sachs argued that he doesn't understand why the rating agencies, for instance, have a cap for developing countries like Ghana when it comes to ratings, and that there's actually a level that they can't go beyond.
The next period of rapid growth is Africa's turn. Not that India will suddenly slow down, or China. Both will continue to grow rapidly, as will other parts of Asia. But I think Africa can be and should be the premier growth of the world economy from now until the goal of 2063, the 100th anniversary of African unity, all of the vision of Africa as a high-income continent is completely achievable, in my view, between now and 2063. Indeed, I think that's the course that Africa will achieve.
He believes that the time has come to take a second look at the module and how they go about things.
The first area of investment that is the gold mine for Africa is investment in education. The second area of investment is in infrastructure. So power is crucial. The power sector, the digital connectivity, the road network, the rail connections, the ports, the airports, the urban infrastructure. This is a major part of the investment scene. The third area of investment, of course, is the business sector. It's the private economy. And that is where the private entrepreneurs have, of course, the overwhelming responsibility. But there's no doubt a tremendous burst of entrepreneurship across Africa. If the skilled work is there and if the physical infrastructure is in place, then Africa will achieve a boom in the private sector as well.
In a separate event, chairman of the Dangote Group also was worried about the fact that enough is not being done for indigenous businesses to raise funds and turn around their economies. He believes that those who have what it takes to develop their respective countries in Africa are local businesses and not foreign investors. He also argued that a lot should be done to assist indigenous firms in Africa because they have what it takes to turn things around.
We have 60% of the world's arable land. Yeah. Agriculture is not cheap. Okay, we have all the mineral sources from gold, lithium, diamonds, everything. We have it here. Yeah. So all what you need to do is to start giving conditions to people. Don't come and take my cocoa and process over there, and you come now and sell the chocolate to me 20 times the cost of that chocolate. We African champions, we need to understand that we are the only people that can make Africa great. Yeah. Nobody will do that for us.
We'll call it putting the icing on the cake. The president of Afreximbank, in his address to shareholders at the meeting here, talked about how things have been transformed at the bank.
In view of the enormity of the challenges arising from severe cuts of development assistance, we plan to raise the size of the trust fund to $5 billion from $1 billion with shareholders' approval, which we hope we can get tomorrow. The area of political and business leaders who have joined us from the Caribbean speak volumes regarding the progress we have made with our outreach to our friends, brothers, and sisters in the CARICOM.
He still believes that a lot more still needs to be done going forward to make it the premier financial institution in Africa.
I would also like to reiterate that the progress we have made as a bank wouldn't have been possible without the unflinching support that shareholders provided during the last decade. The equity injections enabled us to deliver on our core mandate and helped us to confront short-term economic shocks. The investments by the bank since 2011 aggregate to about $2 billion and are rapidly transforming the economic landscape of the beneficiary countries, boosting SME growth and job creation, as well as trade in value-added products.
For many, the surprise of the occasion was when the president of Nigeria conferred on him the highest award in Nigeria, to Professor Omama, in terms of what he's done for the institution and even Nigeria.
I have the honor and privilege to recognize you, the outstanding contribution of Professor Benedict Orama, by conferring you with one of Nigeria's highest honors, the Grand Commander of the Order of Niger. Thank you.
From the event center here at Abuja, Nigeria, this is George Jaffe reporting for Joy Business.
All right, turning to one of our top stories this afternoon, Ghana is set to receive some $360 million from the World Bank to help stabilize the economy and lay foundation for growth after the executive board approved disbursement of this amount to the country. Here's more in the following report.
Disbursement is coming under the World Bank's International Development Association for the country's second resilient recovery development policy and financing operation. It's primarily meant to lay the grounds for sustainable and resilient economic growth as well as job creation. It would seek to help government restore fiscal sustainability, support the financial sector, private sector development, and improve energy as well as financial discipline, greater domestic revenue mobilization, enhance the stability of the financial sector, and promote private sector investment for the private sector-led growth.
You're watching The Marketplace. We're taking a short break. When we come back, we've got your financial markets update. Now, welcome back to The Marketplace. There are heightened calls for the private sector and the government to take a critical look at investing heavily in Ghana's local seed production industry. Stakeholders in the agri sector, particularly scientists, observe a lasting gap in the adoption and upscaling of diverse locally developed seeds. Despite the release of some early seeds by research institutions, the large-scale production of these certified local seeds has seen low interest from the private sector, with imminent threats to food security. Emmanuel Baidkweku was at the maiden Researchers and Investors Summit in Agriculture held in Kumasi and found this report.
Ghana has made significant strides in local seed production, varying from cereals and leguminous crops to root tubers. Research institutions like the Crops Research Institute of the Council for Scientific and Industrial Research continue to lead the charge in producing improved indigenous seeds for farmer adoption. Speaking at the maiden Researchers Investors Summit in Agriculture, Director of the Crops Research Institute, Professor Maxo Dakwa-Asante, emphasized the urgent need for investment and transformation of Ghana's seed production sector.
So, the current situation for the legumes and the cereals is okay. At least we are able to produce the breeder seed and the foundation seed. The bottleneck again is the certified seed part. The same problem. We don't get proper business people, and people should forgive me. We get people who are just interested in government policy. We need people with deep pockets to take it as a big industry. It's a huge industry around the world. But particularly for vegetable seed, that one we are far behind. But now we are beginning to get varieties, and producing vegetable seed is a lot of work. So the same call, we need people with money.
The 2025 Researchers and Investors Summit assembled industry experts, academic professionals and journalists in Ghana's agriculture sector to dialogue on building resilience in the sector. The event was held on the theme, Bridging Innovation and Investment Gap for a Resilient Agriculture in Ghana. Director of the Agri-Eye Consult, Richmond Frimpong, highlighted the critical need to build synergy between research and industry as he advocated for tax holidays for industries in the agriculture value chain.
Through the summit, we aim to 1. bridge the innovation to impact divide by translating research into real-world agribusiness solutions. 2, stimulate local and international investment in agricultural innovations. 3, empower young scientists and early-stage innovators to become tomorrow's agribusiness leaders. To this end, I entreat the government of Ghana to grant tax holidays to locally manufacturing firms within the agriculture value chain.
CEO of Legacy Crop Improvement Center, Dr. Amos Rutherford Azinu, impressed on the paradigm shift from smallholder to large-scale farming to boost productivity.
Agriculture has a potential to feed not only the entire continent, however, to feed the world as a global stage, and also be able to solve food security. However, realizing this opportunity requires a strategic investment. Not just investment, but that investment needs to be very strategic in research and infrastructure, in technology transfer. But we have heard so many times where research has developed good technology, but there's nowhere to take to. So those investments need to be well structured, need to be well coordinated so that it gets used by the smallholder farmers or whoever want to use it.
For Joy News, my name is Emmanuel Bright Kweku.
All right, a quick update on the financial markets. Let's begin with the Treasury bills. Is that what we are doing? The Ghana Stock Exchange. All right, let's talk about the stock exchange. It is expected to record more laggers this week than gainers. This is due to selling pressures in some stocks. Here's Grace Munayin of Data Bank Research with a preview of trading activities for this week.
The Treasury got 3.64 billion Ghana cedis as against the target of 3.
At the close of trading last week, the bourse registered 7 gainers and 4 laggards. The gainers were Total Energies, GCB Bank, Ecobank Ghana, Standard Chartered Bank, Societe Generale Ghana, Cal Bank and SIC Insurance. Conversely, New Gold, Fan Milk, MTN Ghana and Enterprise Group all declined. Driven by the gains, the Ghana Stock Exchange Composite Index advanced by 0.62% weekly, to a year-to-date gain of 27.82%, while the Data Bank Stock Index increased by 1.74% weekly, to a year-to-date gain of 30.36%. Weekly turnover decreased by 21.6% to 21.8 million Ghana cedis after trading 5.8 million shares over 24 counters. MTN Ghana traded the most last week and accounted for 64% of the market turnover. Based on outstanding bids and offers, we tipped the share prices of MTN Ghana and Enterprise Group to drop further due to selling pressures. For Joy Business Reports, Grace Munayin of Data Bank Research.
On the Treasury market, government failed to meet its Treasury bills target for the 4th consecutive week. Here's more.
0.86 billion Ghana cedis. The majority of the bids came from the 91-day bill, with investors offering 2.869 billion Ghana cedis. This represented 75.04% of the total bids. For the 182-day bill, investors tendered in 616.79 million Ghana cedis. The Treasury accepted 385.82 million Ghana cedis. A little over 129 million Ghana cedis of the bids came from the 364-day bill. The Treasury, however, accepted 60.81 million Ghana cedis of the bid. Meanwhile, interest rates continued to dip but marginally on the yield curve. The yield on the 91-day bill went down by a basis point to 14.69%. VAT of the 182-day bill also declined to 15.25% from the previous weeks of 15.45%. However, the yield on the 364-day bill went up by 9 basis points.
And that's the marketplace. More news on our website, myjoyonline.com/business, including an important update on fuel prices. You want to check that out, myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching.